Hello, everybody. Good to be here for another edition of the Kansas City Market Pulse, sponsored by Midwest CRE Advisors. Changed the name of the brokerage, and there's a reason for that. And we'll have more information, a press release, and things coming out about that here soon. But first and foremost, welcome back. It's been a little bit since we've had Topher Stevenson on, and wow, was that just a game-changing episode. If you missed that, please do go review that. We talked a lot about artificial intelligence and how technology is really changing the game on the commercial real estate side, and we are adopting and utilizing so many different tools and resources now on a regular basis. We have a new edition of the Market Pulse here today and a new segment called the Deal Spotlight. What are we going to be doing today? And I want to answer that for you guys. And we're going to be here talking about an actual live property and walking you through the offering memorandum, the financials, and answering any questions that you may have around this project. So as we're going through, please do send in your questions on YouTube, on LinkedIn, in the chat. Make sure to drop them in there. Our team is going to be evaluating those, and I'll get to all of the questions here today. This is an exciting new edition of the Market Pulse because there's not a lot of this happening in our industry where you have a live deal and you have the broker that is working with that coming online and asking and answering questions around this offering and this investment property. I think it's a really interesting way to get feedback from the market, but also to be able to get our listings and our projects out in front of more and more people on a regular basis. Please do let me know if somebody knows about anybody else doing this and talking about their projects online. But I think this is a great resource and a great tool, and we will continue to do this for all of our listings, for all of our projects as we continue to gain momentum in the market. Because it's one thing to look at an offering memorandum of a PDF, but it's a different thing to watch a video and actually go through all of these different components of these deals, because each deal is different and it takes a real unique understanding from the broker's perspective on how to position these projects and answer those questions. So feel free to drop down, any questions that you guys have. I'll be monitoring the chat. Katie's watching and making sure that we're getting everything from LinkedIn and from YouTube sent over to me. I'm a visual guy, and I really do want to start. You're welcome, Kimberly. Great that you're here. You're welcome for doing this. I think this is a transparent way for people to get, the information out to the marketplace. And I hope this is a trend that more and more commercial real estate platforms and brokerages will continue to do. Most definitely. But I'm a visual guy, so I want to make sure that we start with an overview of the property and give you guys a really good visual. And I think that videography and drone footage does a great job of that. So this project is a 36-unit multifamily project in Holton, Kansas. We will spend time going through where is Holton and what is the demographics of Holton. But you can see here a very clean property. This was built in the 2000s. Okay, so the vintage is very, very new. We have a mix of 2 bedrooms and 3 bedrooms. Here being highlighted right next door is a beautiful park for all of the families that decide to live here. You have a playground. You have the ability to have a park nearby. I want to just pause and sit right here because when I'm on site, all I do is see all these different bikes and families living at this property. And what a great amenity for those families here. So this does a really great job. One unique aspect of this real estate project is, as you can see, here are the multifamily buildings here. You might say, why is there a clubhouse on a 36-unit property? Well, there is, and that's where the laundry is. And you can actually rent out and or use the room for birthday parties and things like that. So another amenity for families in Holton, Kansas to be able to utilize if you live here at the property. So let's just continue on, and this video will be ended here very shortly, but should give you a really good, clean idea of what you're walking into here on a 36-unit multifamily property in Holton, Kansas. So let's jump over to our offering memorandum and just walk through what we're what we've got here. So this is a property that's priced at $1.8 million. Okay, so there's a nice photo of the property, $1.8 million, and we have 36 units. So we have 20 2-bedroom, 2-bath units and 16 3-bedroom, 3-bath units. The square footages are 880 square feet all the way up to about 1,020 square feet. Built in 2000. This is a rare investment opportunity at $50,000 a unit. I mean, I'm pretty sure this would cost, anywhere between $130,000 to $170,000 a unit to build, maybe more, in today's climate. This was developed using low-income housing tax credits. Okay, so what that means for the next purchaser is that there's a number of these units, 28 out of the 36 of these units are rent restricted until 2039. Well, you may ask yourselves, well, what's the value play here if we have rent restrictions? Well, the historical leases, 51% of our rent roll is at levels way below, close to $200 to $300 below the average median income rents for this property. So even though we have 28 units that are rent restricted at the 60% AMI level and the 40% AMI level, I believe those units are able to charge $704, $750, and $875, and we'll showcase the rent roll here very shortly so you can get a visual representation of that. We are not, 51% of the rent roll is not at that level yet. We have proven out on 6 to 8 of the units that those rents can be achieved. And on the 8 market rate units that have no rent restrictions, we're able to generate all the way up to $975 on those 3-bedroom units. So the value here, and I want to make this very clear because I have had numerous, tens, maybe even 50 conversations around this component here. A lot of people are saying, there's no value in this project. There is value in this project. And the value is letting those leases roll off, doing your make readies to make sure that the units look like this that you see here in the photo, and raising those rents to the AMI levels, which will allow for around $200 to $250 per unit on 51% of the rent roll to get where it needs to go. Okay, so this is a really attractive entry point into the housing market. We have potential for really strong cash flow, especially over the next 5 years as those leases roll. And that's the value add that you have. It's a very clean deal. There's not a lot of CapEx that's going to be needed on this project. Maybe you need to reseal and restripe the parking lot at some point, but roofs, siding, mechanical, electrical, plumbing, you're not going to have any of those issues that you may have in some of those older 1960s and 1970s products, right, in those projects. So it's been very well maintained. It's a stable deal, and it's stable because there's not any multifamily properties. There's maybe 1 or 2 multifamily properties outside of this project in Holton, Kansas. Holton, Kansas is right 30 minutes north of Topeka. We have a strong job market here. We have major employers in healthcare, education, and manufacturing, and they have great schools. We have lots of parks and a nice little, cute, vibrant downtown. Okay, so it's a small town, 30 minutes north of Topeka. So you can get to Topeka and work really easily, and you have a really affordable and attainable place to live here and a safe place to live in Holton, Kansas. And that's represented in a occupancy, 93% occupancy here. I mean, with 36 units, you can really only have 2 or 3 units vacant and you'll be at 90%. So it's been strong occupancy for a long time because there is a large demand for very little product type, and it's very affordable for folks to live in. Okay, so here's some pictures, good, nice visual representation. I've had a lot of questions around, hey, should we go in and think about upgrading the interiors? That's up to you. However, we've proven, the ownership has proven that you do not need to necessarily go all out on any of the renovations to be able to achieve the rent increases that they already have. So I think that this classic style of unit is very smart and should be continued to be utilized. So as long as the materials have a useful life. There's a nice picture of our clubhouse here. Utilities are paid by the landlord on the water, sewer, and the trash. Electricity and gas are paid by the tenants, okay? We have plenty of off-street parking for the residents. Nice grounds and a really nice area next to the park that we talked about. So again, We've had multiple leases signed at those higher market rates, and the market demand continues to be strong here in Holton, Kansas. Let me just break down what this means on the rent roll. So, on those 22 bedroom, 2 bath units that we have, they're all 880 square feet. 6 of those are at the 40% AMI level. So that would mean that you can raise those rents up to 704. The additional 6 units are at 60% AMI, and you can raise those to 750. We have 8 2-bedroom, 2-bath market rate rentals at 975, and we have achieved that on multiple units. And then the rest are the 3-bedroom units, which are 16 3-bedroom, 2-bath units at 1,000 square feet. So you have a great amount of square footage, large units, and those are at the 60% AMI level. Again, average median income, and that will be able to be raised to 875. So just taking a look at that and being able to see, okay, well, what does that actually mean? Well, let's take unit 101. Let me just highlight this for you all for an example here. So unit 101 is currently a 3-bedroom, 2-bath unit, 60% AMI, and the current rents are 575. So we have in our pro forma the rents at 875 because those have been achieved. If we just come right back down to unit 103, let me highlight 103. That is a 60% AMI unit, and it is at currently 875. So in the pro formas, in the rent rolls, we've only utilized the rents that have been achieved already on site, and that's represented in the leasing in the rent roll here. So that's the value add that you have. We have another one, 102 at 500, while the pro forma is 875. Okay, so that's the value. We have about, I think, 3 vacancies right now. So we're 33 out of 36 units occupied, with additional applications being put on and worked through right now. So here's a really good example of a property or a unit that is at the 40% AMI. The historical lease level is 435. And the AMI, which would be 40% AMI, is going to allow you to raise that rent up to 704. Okay. So what that means on an annual basis or on a monthly basis for the whole rent roll, right now we're collecting and our rents around $21,000. Well, when you are able to roll all of those leases and bring them up to the AMI levels or the market rate levels that have already been achieved on site, you're going to be able to add around $9,000 per month in your rent roll. If you analyze that, we're talking about $108,000, $109,000 of rent annualized. 50% of that should be, 40 to 50% of that should be able to go and flow through to the NOI. So that, and I'll show you a visual representation of what that looks like. But there's about, $1 million to $1.2 million of value to be harvested on this property without very much of the cosmetic upgrades needed to be done, and no CapEx. You just have to wait for these leases to roll. Okay, so moving on, we've got some sale comps in the areas that you can take a look at, and all of this information is live on LoopNet. It's live on Crexy, and you can reach out to our team, and we can get you more information if you would like to learn more about that. We have an updated T3 that's going to reflect what we have here in the operating pro forma. So currently, right now, our gross operating income is right around $267,000. There's not a whole lot of other income opportunities here on this property with it being rent restricted. Okay, so just thinking about that, our gross operating income is going to be around 267. So any increases truly will come from the rolling of the leases and raising those to the AMI levels or to the market rate levels. We're running this right around a 47% operational expense ratio right now, and that's highlighted right here in the pro forma and on the currents. What I'll tell you is that many times, we'll have a really low operational expense ratio. We're not showcasing that. This is a 2000s vintage product, and we're showcasing it at 46%, what it truly actually is. Okay, so our net operating income that we are achieving right now is somewhere between $135,000 or $145,000. Okay, so that's the true NOI. And so when I say that this is an 8% cap rate deal, it is. And I have the operating statements to be able to showcase that. So again, this is a really nice visual representation of where the income comes from. So this gross rental revenue is going to be in the blue here, and the other income, which we'll dive into here shortly, is in the red. So not a whole lot of additional other income line items here. All right. So our operating projections allow for cash flow after your debt service, which we have a bank. If anybody is interested in reviewing this property, we have a bank out of Hutchinson, Kansas that has given us a great debt quote for this property that we'd be happy to introduce you to, and you can talk to them. But our cash flow after debt service is right around $40,000. And our pro forma year one, we have a higher vacancy rate. So we've been tried to be somewhat conservative on that front. So I have a higher vacancy rate on those units and on the property. So we're actually dropping the NOI on year one, on the pro forma year one, so that you can actually see, okay, well, maybe there is a little bit of a dip because of a ownership transfer or maybe some leasing, things like that. And then we're getting back up in year two when those leases really start to roll around cash flow between $75,000 and $100,000 a year for this property, right? So, but when you stabilize this property with the current interest rates, this thing should be able to generate between $90,000 and $100,000 of cash flow for the next buyer. I think that's very attractive in today's market, especially with this vintage here. Okay, so this property, again, it operates under the LIHTC program. So 28 of those units are reserved for residents meeting specific income thresholds based on the average or area median income. And those are governed by the LURA, or a land use restriction, which remains in place until 2039. All right. So this is not a project-based Section 8 property. So rental subsidies are not tied to the units. However, some tenants use the housing choice vouchers, as well as working with NECAP, or Northeast Kansas Assistance Program, to subsidize their rents. All right. We have a little more information on that. So what I wanted to do next is give you an additional visual representation of the property and of the units. And so we had our photographer and videographer come out to the property and do this really cool walkthrough so you can get an idea of what one of the units is there. Because we realize not everybody is in Missouri or Kansas that might be interested in purchasing this property and this investment property. So right off the bat, you can see it's very clean. We have nice upgraded, doorknobs and poles, carpet, some laminate flooring. This gives you an idea. We've got a half bathroom here. So right there, when you walk in, we have a half bath that can service the living room. There's our kitchen. And we're driving through. What's really nice on this property, as I'll tell you, you don't see a whole lot of Yorks in these types of properties. So the HVAC is really nice HVAC, and it's updated and it's well kept. So that's a utility closet right there. So everybody wants to take a look at those utilities because that can be a real big hidden expense in a lot of these multifamily properties. So heading over to bedroom number one, you can see the bedrooms do have closets going down the hallway. We've got a couple more bedrooms. This is one of the 3-bedroom units here. So good sized bedrooms on both sides of the property. Closets on each one. And there's our full bathroom. Oop, let me zoom back out. Show you our full bathroom here. Well, I'm having a little bit of a hard time getting the bathroom door to open for me. But you guys get the idea, right? So this is available for everybody. We have a 2-bedroom unit and a 3-bedroom unit to be able to take a look at. What I wanted to showcase next is more around where this property is located, okay? I spent a lot of time talking about small town USA, the Midwest being flyover states. Well, the way that we're positioning this is it's a small town, but it's a big opportunity, right? 30 minutes north of Topeka, about an hour away from the KC Metro. The population's around 3,300 people here, and the regional economy is anchored by healthcare, education, and agriculture. It's a unique opportunity. It doesn't have a whole lot of supply for the property and for the area, but there is a decent amount of demand here. And so this is an interesting fact, but Holton, Kansas does serve as the county seat of Jackson County with around 3,400 residents, okay? Small town stability with affordable living, right? Remarkably low unemployment rate, right at 1.9%. I think that the Southview Apartments really does stand out in this market due to its above average unit sizes, okay? And its well-maintained interiors right next to a park. It positions it as one of the more desirable affordable housing options locally, okay? And so, you think about that, and yes, it is a small town, and it's a smaller multifamily property, but you have a big opportunity to really be the best place in Holton, Kansas, and generate a lot of demand. And we've proven that the ownership group has proven that time and time again with their current rent rates that they're able to achieve while these leases are rolling. So here's some more key demographics and housing market metrics. The median listing price for a single family home in the area is around $225,000. The median gross rents around 647. Okay. And about 35% are renter occupied households here in Holton, Kansas. All right. So there's really a really strong market for this types of demand. So we have larger than typical unit sizes for affordable housing in the market. We've got some upgraded interiors. We have stable long-term residents. The rent benchmark achieved already at 975, and it really allows for these strategic turnover opportunities. So from a value creation standpoint, the current NOI being at $145,000 at a 7.5% cap rate, that purchase price would be around $1.9 million. Well, we are advertising and listed this property right at $1.8 million, so closer to that 8% cap rate, okay? If you're able to generate about $100,000 of increase in the rent roll, 40 to 50% of that comes down to the NOI. That's how we go from $145,000 to $215,000 at a stabilized NOI. At that same 7.5% cap rate, we're going to see a value of around $2.8 million. So this approach, by taking this property on, it increases the value in around $940,000 by repositioning those leases to proven market or the regulated rent levels that have already been achieved. So I think this does a great job, really just visualizing the value that can be harvested here. Why is Holton, Kansas a stable market? Well, you have consistently high occupancy. We have stability because 28 of the units are, rent restricted, and some of those units are being subsidized. So the rental rates that the current residents truly have to bring to the table is anywhere between $300 to $500 a month, which is extremely affordable, right? We have rising home values and a nice, strong economy in a nice little submarket of Topeka, Kansas, an hour away from Kansas City Metro. So I'm not one here to really blow any smoke on this, and I'm not telling people to come in and try to do big cosmetic upgrades and drive the value, because I don't think you necessarily need to do that here. With its already strategic position in the marketplace, the above average sized units, the already stable, predictable returns driven by leases and rental rates that have already been achieved on the property, I think there's a really compelling value creation, and NOI can be significantly increased to reposition this asset. So I have been getting a lot of questions additionally around the management, and Van Binsbidgern is the management company. And I've said that 100 times and I've messed it up 100 times, but it is a management company that has many properties in the Topeka area, and they specialize in small towns as well as low-income housing tax credit development. So they have a compliance department that can really handle all of that work that needs to be done with the state, right? And they were founded in 1996, and they would love to stay on, and I think they're doing a phenomenal job here on the property. All right. So I think that if you are worried about or concerned about the management side of the table, Van Binsbidgern is a great option because they're on site. They know the property well. They've been doing a good job. They've been keeping it occupied, and they have a compliance team that knows how to deal with all of those different complexities on the property that has low-income housing tax credits. So that is an overview of the Southview Apartments. We're very excited about this. Just today, activity has really started to pick back up for this property. We got our second or third offer in today, and I think we're going to have other offers coming in on the property, and we're very excited about that and continuing to bring this property to market because we do believe that it's a great opportunity. So I want to get into some of those questions that folks may have on this property. So we'll just start from the top here. So I've got a couple questions here. What's driving the upside here? Okay, so I think that since we've already seen the market rate leases sign at 975, and we've achieved these rent restricted units of taking them from 435 up to 704, 750, and to 875, which was visualized in our rent roll here. I think that that is the value creation. I do believe that if you were to take a look at maybe the grounds on the parking lot, as well as the playset that's in the middle of the property, there's probably some upgrades that can be done to that property right there as well. But occupancy is at 92%. And we believe this isn't just projected upside, it's being proven in real time. So are income restrictions going to limit the rent growth? Yes, they do apply to 28 of the 36 units, but rents are allowed to increase annually as HUD adjusts those AMI thresholds. Plus, we have the 8 market rate units, and we've already talked about the ability to raise the current lease rates that are historical leases from, and that's 51% of the rent roll, at the rates at 704, 750, and 875. Is this a partnership or a clean sale? So this is a fee simple sale. So you're buying the asset outright. There are no partnership or GP complications. All LIHTC compliance is tied to the property via the land use restriction, which remains in effect until 2039. In-place cap rate right now with pending leases signed and our NOI really close to about $145,000. The in-place cap rate is right about 8%. Yeah, replacement value. That's great. How much does it cost to build something like this today? Well, this is where it gets interesting. Southview was built in the 2000s, but to replicate it today, likely to cost maybe $130,000 all the way up to $200,000 a unit, just depending on kind of where you're at. So you're stepping in at right around $50,000 per door, with limited capital needs and real rent growth, making the basis extremely attractive. What about maintenance and CapEx? Okay, so the property is in excellent condition. Ownership has been installing new floorings during some of the turnovers, but there's no major capital projects pending. Roofs and siding and systems were upgraded, and ongoing repairs and maintenance is operational in nature, but not really deferred maintenance. Okay. Yes. So we do have, again, Van Bins Bergen on the management company, and they specialize in these low-income housing tax credit properties here, especially in smaller markets. Yeah, so the owner is selling because they are a larger firm that is continuing to acquire assets, and they're freeing up some cash from some of their smaller properties, and they don't have a huge presence in this necessarily this area, and so they are looking to focus on larger assets, and they believe the timing is right given the current market supply and the ability to prove out that they've already proven on the rent roll on these increases. So it's definitely not a distressed or an urgency sale. It's a strategic disposition. Yes, on the debt side of things. So First State Bank of Hutchinson, Kansas, has said they could loan up to 80% loan to value based on the lower of the cost or the appraised value. Okay. So that's kind of where they're at. The rate's going to be anywhere between 7.4% to 7.65%, depending on the strength of the borrower. That's going to be fixed at 5 years and then adjust to a margin over the 5-year treasury bill, likely a 2.5% to 3% margin. If anybody needs an introduction to that bank and that group, I'd be happy to make that for you. Okay, so unit by unit LIHTC designation breakdown. Yes. Okay, so 16 3-bedroom units, all restricted at the 60% AMI levels. We have 6 2-bedrooms at the 40% level. We have 6 2-bedrooms at the 60% AMI level, and then 8 2-bedrooms are 2 bedrooms and 3 bedrooms are all the market rate units. That means that 28 out of the 36 units are rent restricted under the land use restrictions. Great questions. Keep them coming in. Yeah, so laundry machines. The property features the central laundry facilities that's located in the 6th building. So I do believe we have a nice picture of that. So give me a second here, and all of these pictures and more are going to be on Crexy. So you're going to be able to see a ton of photography and the inside of this building here as well. So laundry facilities are right there. Okay. Property is master metered for water. Any other income breakdown? Okay, so the other income on the property includes laundry. And then we have forfeited security deposits. There's really no utility bill backs for electric or gas. Tenants are paying those directly. All right. Any historical delinquency and lease up issues? There's no material historical delinquency or chronic vacancy that has been noted. COVID era rent levels remain stable due to strong light tech demand. And the property is currently experiencing the strong leasing that we've talked about, with recent move-ins anywhere from 875 all the way up to 975, which is validating that rent growth potential. Some people must have dived into the financials a little bit here. We're getting some more questions around some pretty detailed things on the other incomes and the tenant ledgers. Okay, so services on the expense line. Okay, so in regards to services, it primarily reflects, the pest control expenses. This has been verified through the vendor ledger already, which we can send to you. Includes charges from recurring pest services and other minor service vendors. So we have sanitation and incidental contract services. It's an operating cost, and on the tenant charges as well. So the tenant charges are going to include, it's going to really be non-rent income, right? So it's going to include any late fees, any other charges from the past balances. So that might be damages or miscellaneous tenant obligations. Full underwriting. Yes, we do have a full underwriting available for this property on the current as well as the pro forma. And that is in the offering memorandum. If you would like a full interactive underwriting, please do reach out to our team. I can send you a link to that. But in the offering memorandum, we do have a full underwriting available for you to evaluate. I think we've been pretty conservative in this underwriting. And I think the biggest opportunity here is to really see that $8,000 to $9,000 worth of rent that can be generated as these leases roll. And our pro forma operational expense ratio is right around 43%. Okay. I do believe we've gotten through most of the questions. So if you are interested in finding this property, you can you can just Google Southview Apartments on Crexy. And it is located at 110 South Pennsylvania Avenue in Holton, Kansas, which is 30 minutes north of Topeka. We're going to have more information here for you to evaluate as well. I do believe we have 37 different photos for you to take a look at. You can look at the street view as well for the property. Let's just get into some of these interior photos. Our drone footage is going to be available, as well as these 3D Matterport walkthroughs, so you can get a real clean idea of what that looks like. But here's some of the interiors of the units on these properties. There's the kitchens. There's our hallways, utility rooms, more bathrooms. So pretty standard, very clean. No real issues to really tackle. Windows have been updated as well. And this is some photos of the office that we have there as well, and the laundry that's available for the residents. This is one of these great amenities for families here that's located in Holton, Kansas. This is that community room that is available for them for birthday parties or get-togethers or whatever. It's a really great amenity for the families here. And there just gives a great overview of this property. And you can see all the land in the park that is nearby for the apartment complex here. So, going back to kind of, the key takeaways here, I think there's a strong opportunity in a strong demand with a small town feel and a small population to be the best multifamily property with affordable and attainable rents in Holton, Kansas. We've talked a lot about the compelling value creation opportunity here, and I'd be happy to walk anyone else through that if you would like. But the also component here is you're thinking about investing in Holton, Kansas, is the strategic position that we have here, right? The property is well positioned. We have larger than average rents, larger than average sizes of the units, as well as the park being next door, a family room that can be rented out and laundry on site. We think that that's going to create stable and predictable returns. So if you're interested in learning more, head over to our website or reach out to Katie or myself on the team, and you can find all of the information and request more information and a call from me through the Crexy platform or from the LoopNet platform. So this is going to conclude kind of our deal spotlight. We wanted to keep these around 30 minutes. Thank you for all of the questions that we have. We do have active offers actually coming in this week for the property, which is very exciting. So if you're interested, get on the horn with me or somebody on our team. Make sure that you get the information that you need to evaluate this property, and we can continue the conversation. Additionally, the team here at Midwest Commercial Real Estate Advisors, we're very active, we're very busy, and being productive with our time. But we do have a lot of properties coming. We have another property for sale over in Shawnee, Kansas. We have many properties up for lease on the flex industrial side if you are interested in that space as well. And we are working on many land opportunities here in the Kansas City metro area. So please do find us, reach out to myself or anyone on the Midwest Commercial Real Estate Advisors team. We'll be happy to talk with you. And thank you all again for jumping into a quick deal overview, deal spotlight project. We're going to continue to bring these to the marketplace, and so you guys can ask questions and get to know us a little bit better. And if you have general market questions, check out the newsletter over on my LinkedIn. We just put up a really robust, I think, comprehensive overview of how Q1 of 2025 really did in regards to commercial real estate transactions. It was right around $75 million, which is great because that is a big jump from Q1 of 2024. A little bit down from Q4 of 2024, but that's to be expected because many people are trying to get deals done by the end of the year. So it was great to see that, and we go into more detail on how Kansas City is doing and some of the opportunities that we're continuing to see here. But Kansas City is really starting to get a lot of attention nationally because of the rent growth on the multifamily side, from the occupancy levels on the retail and the industrial side, and the affordability here in the metro area. So if you're interested in investing or learning more about just the Kansas City area, check out the newsletter that we put out on a regular basis. We just dropped our industrial market overview and our comprehensive report on that as well, all free for you to evaluate. We'd love to spend some time with you. Again, thank you for joining us for our short edition of the Market Pulse here, our deal spotlight. Thank you for all of the questions. I will drop in the link to the property so you can go evaluate that. So I'm going to post a comment real quick so everybody has the link for the Crexy listing here. So definitely go take a look at the property there, and we'd be happy to chat with you. Thanks again for tuning in. We'll talk to you next time.